Good morning, everybody. Hey, welcome to this Tuesday, the 20th of May. Hope your week's going well so far. Hey, yesterday we managed to keep the markets positive. They didn't roll over the falls like we did. But hey, look, it is we're getting ready to roll into a holiday weekend. So it's interesting to see how the markets perform today. It's going to be based on more about earnings. We had Home Depot reported. We'll talk about that and more when Dave joins us here in just a few seconds. Hey, remember that in the world we live in, there are so many things that are outside of our control. We can't control the economy, we can't control the markets, but you can take control of your investment portfolio by knowing the amount of risk that you have in that portfolio and making sure that it lines up with where it should be on your current circumstances. That's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
5.7 Highlands Light FM. That's Brian Adams there. Hey, good morning. We're at 8:40 here, 20 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
So there, it's time to check in and find out what your money's really doing on Wall Street today. And we have him back, Phillip Statler from Statler Financial Services on the phone. Phillip, good morning. Good to have you back this morning. How you doing?
Hey, good morning, Dave. Doing well. Had a couple good days off. Enjoyed the coolness of Niagara Falls, and so that was good. Our first real trip of the year since coming back from some surgery. So glad to be back in the office there.
I'm glad to have you here, but did you have to bring us back the 97-degree highs for today?
Dude, when I left yesterday morning, it was like 50.
Oh, go rub it in. I promised back in January when we had that cold snap that lasted 3 weeks, I was not going to complain about the heat until July. I'm sorry, I'm breaking that promise. It's too dang hot today. Setting the table, yesterday ended up finally in the green after kind of a rocky start. The Dow was up 137 points, Standard & Poor's up by 5, NASDAQ up by 4.5, but everything was green. Before we went on the air, I said, I don't very often miss that badly, but I'd kind of blown things off yesterday morning. I just saw it as a sidebar. When the Moody's bond rating firm decreased the United States federal bond rating. And the reason I blew it off was all it was Moody's finally getting in line with the other two firms. Evidently, the bond traders were more impressed by that than I was. They shot the 30-year bond up over 5% for a while yesterday, didn't they?
They did, and that's going to directly impact mortgage rates, Dave, and they're already high enough. And so that we're going to interesting to see how that little blip affects the mortgage numbers that we see next month for this month.
Oh, yeah, because the mortgage rates yesterday, right away after that little federal bond rate jump, mortgage rates jumped over 7% yesterday just off of that. And like I said, I mean, the other two bond rating firms 1 and 2 years ago reduced our bond rating down from top grade. So Moody's just basically was nothing more than getting in line. But I guess when you make it unanimous, it kind of gives people a kick in the shorts, and it really did a number on the bonds. And we started down yesterday morning. I kind of blew it off as being that mentality in May when there's nothing else going on, sell something. And actually, by the middle of the day, I was starting to feel like I might have been a little justified with that, because a little bit of green at the end of the day really is not a bad place to end up, is it?
No, it's not. I mean, it's definitely better than where we started the day, and I was really kind of surprised that we actually managed to pull a tent of green out of the markets yesterday.
Yeah, absolutely, because we were pretty well, solidly into red ink. I did a little bit of research, and I found a chart showing what happens to the Standard & Poor's after a credit downgrade. And heaven knows we've had enough experience with that over the years. 1 month after a credit downgrade, this was after the 11 Standard & Poor's downgrade and then the Fitch downgrade back in 23. Like I said, it's been years since we've done this before, and it was off by a little bit by a month. But 3 months later, the Standard & Poor's 500 was back in the green again. So, is this a bit of bad news? Well, heck yeah. Even Jay Powell was on the rubber chicken circuit yesterday saying, I've been telling you this is unsustainable, so it's no surprise to anybody. But we're talking about maybe 1 month worth of negative reaction and not much more.
Yeah, it'll eventually, become old news. And once it becomes old news, then, hey, the markets will move back up to where they, or they may not. It depends on, we got more stuff out there, Dave, than just the interest rates to worry about. We still have tariffs. We still have tariffs to deal with.
I was going to say that's the 500-pound gorilla in the room, because the administration is saying it's going to be like the end of this week when letters go out to the countries that haven't come to us hat in hand and negotiated side deals, telling them what their new tariff rate is going to be. We're not going to do it with a presidential chart with a bunch of numbers up there. We're just going to send letters to Botswana and say, hey, congratulations, you're at a 45% tariff level. That's going to cause some ripples that are probably going to stretch out over maybe months instead of just weeks.
It very well could, and how that impacts earnings is going to be another fact as well as we continue to look out over the rest of this year, really. The tariffs, I was reading the other day that Japan may be interesting, that they may want some of the same deals that some of the other countries are getting, and that one may be a tougher deal than what we think.
They've kind of sunk back into the background as far as forefront is concerned. When Trump first announced the really big tariff numbers back in the early part of April, he was saying that Japan is on an airplane over here right now to negotiate a side deal, and we didn't hear much of anything after that. I don't know what's going on with Japan.
No, me either, but that one may be a little more difficult than what we first anticipated.
Yeah, because historically they rival China as far as a major trading partner of ours, so it's not something we're looking at. The bottom line is the trade war is nowhere near over by any measure, unless you wonder about the side impacts of things like the credit downgrade that we were talking about. Moody's also downgraded J.P. Morgan, Bank of America, and Wells Fargo yesterday after our credit rating cut. So there's a domino effect to be had. When something goes down, it takes down the allied industries, and financials were a side effect of that.
Well, that, and I'll tell you another big news item was regional banks. They were a big topic yesterday as well. How this would impact them and some of those things.
There are side effects to everything. Powell sneezes and things get bad, then we actually have something consequential that happens, and all heck breaks loose. A lot of reports still going on as earnings season continues. I understand Home Depot reported. Are we building homes all right? Or repairing them?
Home Depot had mixed results, Dave. They actually missed on earnings by about 4 cents a share. They came in at $3.56 versus $3.60 that was expected. They did beat on revenue, which was good news. And I guess the thing that really got Home Depot in the good graces of the markets is they didn't adjust their outlook. They held strong to their outlook for 2025. They also said, unlike Walmart, that they would be taking and eating a lot of the tariffs, if not all the tariffs. So that actually has them pushed up about 2% this morning.
Cool. And make the administration happy and investors too.
Yeah, exactly. So,
and I would imagine, given the quantity of our lumber that comes over from Canada, they probably are going to be eating a fair amount, aren't they?
It could very well be. That's
really?
a big number. Yeah, it really would.
Absolutely. What else have we got?
So the only other one I have today is Viking Holdings. That's the Viking cruise line. They really had a better than expected quarter, all in the losses. They lost 24 cents a share versus 29 cents that was expected. Revenue was ahead of expectations as well. There must be something in their guidance that I can't see because they're actually trading down 5.5% today.
That's intriguing. Yeah, the Viking has an interesting concept. Don't float on the ocean. Take basically a big riverboat cruise, which actually is kind of a fascinating concept. I'd never considered it until I saw all their cable TV ads. Resetting the table for the morning, it was an up day yesterday after kind of a shaky start. My delayed quotes look a little shaky this morning, 45 minutes early. How are we looking?
You know, Dave, we got a tinge of red there across the board. The Dow is almost even. It's down $12 right now. The S&P 500 is down a quarter of a point, and the NASDAQ 100 is down about 0.4. On the other side of the coin, we got silver up 0.9. Gold's up almost 0.5%. A big mover today. We don't talk about this much. Natural gas is up 3.5% this morning. And gold down a third to $61.97 a barrel.
All righty. Looking overseas, we got a relatively good close on the Asian rim markets. The mainland Chinese markets were up by a third and by 2/3 at the 6 a.m. close, and everybody else pretty much followed suit. Over in Europe, they're also optimistic for some reason today. I've got green ink across the board. The European index is up on balance by about 0.2% halfway through their trading day. Getting my retirement back in line is just something that takes planning, and it takes a pair of eyes that go beyond my resources. How do I get a hold of you to use your eyes?
Dave, that's why I developed the Core Retirement Design to help people design that retirement they always dreamed of. And give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And if you promise not to remind me how cool it is up in Niagara Falls, we'll talk again tomorrow morning about this time. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Surprise parties can be fun.
Hey, folks, again, I want to thank you for joining us today. Hope things are going well. I look forward to speaking to you again tomorrow.